Welcome, multifamily investors, value investors, mobile home park investors, those who see value beneath the surface, to another edition of the Mobile Home Park Desktop. This week, we are going to be talking about Sun's Q2 earnings report. And I think this will be interesting because I know a lot of people are wondering about rent collections, about home sales, infill, how the mobile home park industry has been faring during this COVID crisis. And so by taking a look at Sun Communities, which is the largest publicly traded REIT that's focused on mobile home parks, we could get some general baseline stats and kind of get a sense for how things are going. Now, before we get started, I do want to let everyone know that I have launched a website, Athena MHC, Athena Manufactured Housing Communities. You could go visit athenamhc.com. And on there is a place for you to subscribe for weekly updates. And it also includes some Excel sheets as well as this presentation that we're about to go over. So if you're interested in finding out more information, you can go here. There is also a blog here, and it has some articles related to mobile home parks and being productive and all sorts of good stuff. So if you're interested, go ahead and visit athenamhc.com for more information. And now let's get into this week's presentation. All right, so as I said at the top, we are going to be taking a look at Sun's 2020 Q2 report. The actual report hasn't been issued yet, I believe. So this is based on the transcripts from their earnings call. So let's start here with collections. I know this is a big question on everyone's mind. How is COVID-19 affecting rent collections? And I know that so far within the industry, the news has been pretty strong, pretty positive within the mobile home parks. People have been reporting that collections have continued to be on pace year over year with last year. And for Sun Communities, it's no different. They're reporting 97% collections as of, I think this was for Q2, and 96% as of July 21st. So they are moving right along. The best thing is that this is really in line with 2019 figures. So there doesn't seem to be too much effect currently on collections with everything going on. So that's a real positive sign for the industry. So let's move on to deferrals. So one of the things that Sun had offered all of its residents was the ability to participate in a deferral plan. And that basically gave them, the residents, the opportunity to skip a month's rent and then make that month's rent up over a 12-month period. First of all, it turned out that there wasn't a whole lot of participation. Not a lot of people asked for it. I think across their portfolio, Sun Communities has like 146,000 sites. And across those 146,000 sites, they said that, I think it was less than 3% participated. And the news now is that of those that participated, 17% have already been paid off, or 17% of all the deferrals have been paid off. So that's a good sign. It shows that people are not only weren't needing to participate in the program, but also that those who have participated are beginning to pay back the deferred rents. In fact, the deferral program, there was so little participation that John McLaren mentioned that the deferral program ended in June. So that shows a little bit about the resiliency, I guess, of their residents and their ability to continue to pay despite everything that's going on with the economy. Another finding is that rental applications are actually up 17%. So I guess this sort of fits the narrative that when there is a downturn in the economy, people may be looking for more affordable types of housing. And of course, mobile home parks are the most affordable type of unsubsidized housing available. And so that kind of makes sense there. Another sign here is that the renewal rates have been 68.2%, which I don't know what their baseline is, but apparently that is an elevated renewal rate on rentals. So we're seeing not only are more people trying to rent homes in Sun Communities, but we also see that those who are renting, they're renewing at a higher rate. So people are looking for cheaper forms of housing, and once the people who are in the mobile home parks are not wanting to move to other types of housing. So those are all positive signs for the industry. Home prices, home sales, I should say, on the other hand, are off. I put 621 here. I'm going to have to fix that. It's actually 611. So Sun sold 611 homes as compared to 927 in 2019. And so that number, they attribute mostly to the shelter-in-place restrictions. And so they're having a hard time actually showing homes. And so they're saying that's one of the things that has contributed to the decline. One thing to note here is that home prices are actually increasing. So the average new home price increased 14% over last year to $137,000. Wow, that's a pretty significant increase here. And part of the contributing factors, for one, there's a backlog of homes that I've been hearing about. This is one of the many Facebook groups that I've been in. Here, this Clayton Wakarusa plant, they were talking about how 400 homes were ordered and pushing deliveries out until October. So right now it's hard to order the homes. It's hard to get the homes. One of the reasons for this backlog and for prices going up, this is an email that was sent out by Robert Denninger with Marcus and Millichap. And in this email is an article that talks about how job losses are impacting manufactured home production. So they are not able to produce as many homes as they have in the past. There's also rising cost of home construction. And so there's a lower number of factory-built homes. And because of those limitations, I know I've heard about raw material costs like lumber and things like that going up. And they're just not able to produce the types of as many homes as they were in the past. And that might be one of the reasons why home prices are going up, and also why we see some of these big orders coming in, because people are trying to lock in cost or lock in prices before costs continue to go up. Here we see that there was a 27% increase in overall occupancy across the portfolio. So it rose 70 basis points year over year, as they added 851 revenue-producing sites. So that's a 20% increase in occupancy. Some of it is, I believe, due to acquisition activity, so it's not just all organic growth. But in general, it's a good sign that occupancy continues to go up. Now, here's an interesting note, and this was something that Gary Schiffman, CEO of Sun, talked about. He was basically talking in context about the history of the industry and how the asset class has kind of weathered some of these economic downturns. And he did point out that when it comes to all age versus age restricted, so all age are kind of like family mobile home parks. Anyone could live in them. And age restricted, there's some sort of age restriction requirement. Usually it's like, I think 55 or so or older in order to live in the park. And he said that age-restricted communities actually have, age-restricted, he made a mistake here. He said age-restricted communities, we do get more turnover when there are challenging periods. But what he meant to say, Karen Deering corrected him here, is he meant to say all age communities. So all age communities will face a little bit more turnover during challenging economic periods versus the age restricted. And I think that's one of the reasons why they are balancing their portfolio to have a combination of both all age versus age restricted communities within their portfolio. And this next slide, this is a great slide. So looking back over 18 years, they did an analysis on their bad debt, and they averaged 100 basis points. So that's 1%. And the range was from 60 basis points to 140 basis points. That is just a fantastic number, and one of the reasons why so many people look to mobile home parks as being recession-resistant type investment. The historic bad debt of 1% is just a great number to see if you're investing in mobile home parks. So one thing on the acquisition side that they haven't been seeing, though, is they haven't been seeing any pricing discounts. So if anything, he's actually mentioned that cap rates have continued to creep up, and prices have continued to creep up, and cap rates have actually gone down a bit. And that's here's a quote here that I wanted to point out. A lot of lower quality, less well located communities, if you will, trading in the low fours and sometimes a touch below. And this is pretty much what they've been targeting. Here in this quote here, we're in the range of 4.7 cap rate up to a 6.2 cap rate range. So this is what they're trying to purchase their mobile home parks at. These are some good baseline figures. If you know what Sun is willing to pay, you can probably use that to guide the type of park that you're looking at and what you would be, what type of cap rate you should apply to the parks that you're looking at. Sun obviously is looking at very high quality institutional type parks. I believe that their baseline is they want to have at least 250 lots, and they're very market specific too as far as where they want to be. Last quote, this is from John McLaren from The Call. One thing that I thought really summarized how mobile home parks are doing during this economic downturn was he just kind of reiterated or pointed out the fact that the reason why mobile home parks tend to be resilient is because they deal in affordable housing and affordable vacations. Affordable housing on the mobile home park side, affordable vacations on the RV side. But it kind of makes sense when you're looking at the premise of why you should be investing or why mobile home park investments are resilient during times of downturn. It's because they're affordable, and affordability is always going to be in demand at any time, any type of economic time, but especially so when there are uncertain economic times. And one of the things that was talked about during the phone call was also about the economic stimulus package and kind of like going forward, or what might happen with the industry in terms of rent collections and people's ability to pay. And obviously it's all uncertain and we're not sure at this point. But one of the things they pointed out was what they typically see in these sort of difficult economic times is, yes, there might be more turnover occurring, and there may be some residents who are no longer able to afford to live in the mobile home parks, but there's also downcycling that's occurring. So you have people that were formerly in single family homes, people looking for a more affordable option to live in coming into mobile home parks. So that's one of the reasons why mobile home parks are able to stay so consistent throughout all economic cycles. And again, affordable housing, affordable vacation, something that's always needed in no matter what the economic outlook is. So anyways, I hope you guys enjoyed that presentation. As I mentioned at the top of the article, at the top of the video, I now have a website up. If you're interested in subscribing, you can get a copy of this presentation as well as some other Excel sheets and other tools that I'll be adding to there over time. So if you're interested, go ahead and check out the article, or check out the website. I appreciate everyone for stopping by and watching the video. If you have any questions, leave them in the comments. Feel free to reach out anytime. Thank you very much. Bye-bye.